Trading the markets requires discipline, strategy, and finely honed skills. Traders are up against the best and brightest Wall Street has to offer. At TraderInsight.com, you can look over the shoulder of one of America's top traders. Join Dr. Adrian Manz and a cast of highly talented traders as they earn their living navigating the markets, one stock at a time, one trade at a time. TraderInsight.com. Strategy, discipline, results.
For TraderInsight.com, this is Adrian Manz, and this is Stocks and Sectors on the Radar for Tuesday, November 11th, 2008. Well, on Monday, our trading did pretty much exactly what we thought it was going to do in the Dow Jones Industrial Average. We saw a move up to the resistance line around 91.66 or so that we were expecting. A little pop there, and then a move back down, and ultimately a test of support. We had very, very bad news from General Motors, of course, as well as rating agencies, most notably Deutsche Bank, lowering their projections or their target for the stock to just about zero. So not good news for GM. I think that in sort of the bigger picture, that's also going to mean bad news for the housing market. What we've seen so far has been a lot of speculative housing going into foreclosure, and now we're going to be dealing with the reality of some people losing jobs if something positive doesn't happen for GM. And we all know that when people lose jobs, there's a whole other reason for foreclosure. So this housing bubble, this housing mess might not be as close to over as everyone thinks it is. The Dow was down 73 and a quarter on the day. We had total volume of 1.14 billion shares, 993 advancers, 2,100 decliners. The internals tell the story. Nothing good happening on the Dow today. As you can imagine, the S&P 500, NASDAQ 100, and NASDAQ Comp all look just about the same. The caveat here is, of course, that the downside on each of these three indices is sort of easier to come by. There's less support down below, and if they start cracking, they're probably going to go in a big hurry. The other thing that we talked about over the weekend was some stocks that I thought made sense going forward, and what was going to happen over the course of the week. And we know that those were the retailers and consumers were the ones that I was most focused on. And of course, top of the list was Starbucks, which was reporting earnings. Starbucks, after the bell today, boy, earnings are down about 90%. They've let down their shareholders. They've mismanaged the company, and they are going right down the drain. And stock showed it today. Opened high, closed low. After the market sold off even harder, so we had about a $1.10 potential profit off the open there on the short side. We were also looking in the consumers to Tyson Foods. Same kind of a story. Made a big move lower. I'm not going to be watching this one too closely for the rest of the week. Pretty much got out of it today. The move from about $8 a share down to about $6 a share was what I was looking for in terms of a range expansion lower. Could possibly see a retest of that October 28th low, but until we get some additional consolidation, I'm not going to be too focused on this stock. I'm going to want to see this thing pull into sort of a backdoor slider setup before I start looking for anything lower on it. We also talked about the retailers. We were looking at Kohl's, which did pretty much nothing today. Open high, closed low, but didn't break out of that range. That range was this consolidation range here was where I was looking to see a move lower, so I didn't even get an alert on this thing. Didn't dawn on me they were going to gap it higher for some reason. I was looking at JW Nordstrom, which did the dance today. Talked about that yesterday as well, and the propensity for a move lower. That one did sell off by about $2 over the trading session. JCPenney, same thing, big move to the downside, $3, over $3 a share lower there. And TJX Companies was also one that I had on the list yesterday. That was in a backdoor slider setup. We see there not a whole lot. Did move lower, did move below the slider setup, but not a whole bunch happening there. And then the other one that we spoke about was Abercrombie & Fitch. I am still going to keep this on the radar for a move to the downside. It broke lower today. Didn't necessarily do it in the convincing way that I was expecting to see it move. But I'm going to watch it over the course of the week and see what happens. In terms of other stocks to keep an eye on, I'll be looking at Crown Castle International again tomorrow. This was on the intraday trading plan for Monday. move below this backdoor slider setup that's in here now. We're in the second day of the consolidation on this one. Move below that has the potential to make a pretty substantial intraday move, especially for stock that's only trading at $17 a share right now. And we are also going to look in the retailers at Advance Auto Parts throughout the rest of the week. It's broken below that 20-period simple moving average. That's not really a super significant level, but it was providing support. It's now resistance, and on the short side, I like the way that bar closed. In terms of property, I had said that I'm going to be looking at some real estate plays. AMB Property Corporation. This one looks to have potential downside on it. It's resting on some support here. If it gets down below, I'll be looking for a move down to about 55.17. I'll also be watching Alexandra Real Estate. Same kind of a setup here. We've got a fastball, outside day on this one, range expansion, move to the downside. It's sitting on support. We've got some weekly support here, daily support here, so you probably have to look out a good long way before you see what the potential is for the downside on it, probably down into about the 58.08 range. That's a significant move. Doesn't look like it right there because I'm looking at a monthly chart, but I'll be watching for that downside price action, and I will tailor my trading accordingly. So that's it for Tuesday. Looks to me like we're probably going to head lower again, but we'll see. Could be some kind of a good surprise for the markets tomorrow. You got to have one sometime here. But in the interim, we'll just take what the market gives us, and Julie and I and Tom and Art are going to trade all this stuff by means of taking the path of least resistance, which has always proven to be the easiest road to profits for us. So for TraderInsight.com, this is Adrian Manz, and this is Stocks and Sectors on the Radar.